Good morning, everyone. This is Jamie Keach from the Resource Insider podcast, and we are on day 2 of the quarantined edition. This is actually the second podcast I'm recording today. Earlier, I talked to Rick Rule. That's out now. You guys should check that out if you haven't already. And now I'm going to be talking to Marcel de Groot. If you've been listening to this podcast for some time now, you've no doubt heard my previous conversations with Marcel. I've known Marcel for about 5 or 6 years now. We've collaborated on a lot of things. I've worked for companies that he's been on the board of and involved in financing. And he's one of the people that I routinely go to ask advice or his opinion or recommendations on what's going on in mining, different stocks or companies I'm looking at. And there hardly a day goes by when we don't chat about something. But we are both currently under quarantine in our respective homes, so I figured this was a great opportunity to bring you guys into one of our conversations, and you can see what it is that I'm thinking about on a day-to-day basis, how Marcel's making decisions, and how we're both looking at the current crisis. So without further ado, Marcel, thanks for fitting me into your schedule today.
Morning, Jamie. No problem. Good to be talking.
So I would say busy schedule, but I'm guessing your schedule is slightly less busy than normal at the moment.
Yeah, it's. I think like everybody's working from home now, and so it's still busy because there's lots of phone calls, but you don't have as much load as you normally would have for sure.
So I guess what I'd like to get sort of to talk about today is, how you see things going on in the world right now, how you're responding to it in terms of protecting your portfolio or your investments, and also how the companies that you're invested in or working with are responding to this. You and I have invested in several of the same companies, but I think it's worth discussing how exploration companies and some operating miners have responded to this, and then what you envision happening over the next whatever it is, 5 months, 6 months, 12 months, and keeping in mind that this is a very, very volatile time and things are changing very rapidly, and by the time this comes out in a day from now, things could be entirely different. But just based on what we know today, let's sort of get into all these things.
Yeah, it is a unique experience that we're going through. I don't think the world's gone through something like this since the Spanish influenza over 100 years ago now. But that said, I mean, when there's a crisis of some sort, it does tend to follow a similar tune. And I think at a time like this, we're currently in the panic phase where there's indiscriminate selling because people are just worried about having cash as margin calls. And lots of uncertainty. And one thing investors don't like is uncertainty. And right now we're in a circumstance where, I mean, who knows how long this lasts? Who knows how many people are going to get it? The way one of the things I've been doing is following the live Corona map that's put out by Johns Hopkins University, just as a gauge as to where this thing's been going. I've kind of been following that since late January when it first came out. And it's interesting because what we're seeing is the numbers from a statistical perspective are really skyrocketing. And I was talking to several people saying, do I buy this morning or do I wait? And ultimately I don't know the exact answer, but my guess is that just remembering basic statistics courses you take back in university is, right now we've got about 180,000 people that have it, that are confirmed to have it. So the real number is probably a lot higher. And we have governments, for example, the Health Minister of Canada saying 30 to 60% of the population might get it. So if you start doing some math, you think, well, geez, that 180,000 people might become 180 million or 500 million or whatever that number is. And if that's the case, it seems to me as though there's a lot more bad news ahead before things settle. Now, markets are always forward looking. So I would expect the markets to bottom well before this whole crisis is behind us in full. I was expecting a couple of minutes experts start picking the winners and losers and investing more astutely.
So that's interesting. And, it comes back to how bad the human mind is at sort of visualizing exponential growth, right? I mean, you're a very math focused person. I'm pretty math focused, but even as an accountant or an engineer, it's really hard to picture sort of growth rates that happen on an exponential curve. And I mean, you started taking this seriously very early on. I would say, if I'm being honest, I probably didn't take this as seriously as I should have. I was isolated in the little ski town in France, and everything was going on, seemed nice. And then I kind of hit an airport, and I really realized, this is moving really quickly. And, I've very much modified my behavior. I've isolated myself since then. But I don't know. What do you think that we're taking this seriously enough here in Canada, and that people are starting to realize the real extent and the risks associated with what's going on?
Well, I think most people by nature are reactive rather than proactive. And so I think that today people are taking it more seriously than they were a few weeks ago. But, a
Or
month
even a
ago,
few days ago, I think.
well, but I mean, a month ago was quite clear when you look at the statistics that this thing was growing and was going to become something significant. Especially when you look at the R naught, the repetition rate of it, and so it's clear that it was going to be getting worse. I mean, the governments are taking action right now. I mean, we'll never do what China did. I mean, China was able to eradicate it so quickly because they basically could take measures that our society wouldn't allow. They basically put guards in front of buildings and people couldn't leave their homes, and it conscripted people to work in healthcare, et cetera, et cetera.
Hmm.
We're taking lots of measures, and they are extreme by our culture, but they're nothing like what happened in China. So I expect it to the virus to continue to grow. I mean, obviously what they're trying to do is bring down the curve so that the healthcare system can handle it. But I do think I think it's being taken seriously. But governments obviously from my experience, tends to be a lot better at talking than they are actually acting and executing. So hopefully that side of things will catch up as well.
Yeah. So you mentioned something interesting, that you didn't think we bottomed yet, but it'll potentially happen in the next few weeks. We did some research, or I should say, my partner did some research at Capitalist Exploits and Resource Insider, Chris McIntosh, and he found that during the SARS crisis, the markets bottomed. What was it? I think it was 2 weeks after things actually had started to improve with the medical crisis. So if you have the peak sort of infection rate, it was 2 weeks after that markets bottomed in the stocks in the market that was affected by it, and that's because people's reaction tends to sort of lag behind what's actually going on, and people weren't really cognizant at the time that things had actually slowed down in the infection front, and the markets reflected that. And so that was when ideally would have been the peak buying opportunity.
Yeah, I think this one's going to be different from SARS. I mean, we've way outpaced the numbers of SARS in that regard. I see this one being a bit different because if millions and millions of people are going to get it in the end, I do think that the psychology will bottom, the emotions will bottom before that. Just because what's going to happen is your friend's going to have it. You're going to call him up, and he's going to, and you're going to ask how he's doing, and he's going to say, I'm not too bad, I've recovered, and after having had it only for 4 or 5 days, and because I think for the bulk of people, it's not going to be much more than a stronger flu.
Yeah.
Obviously, it's much more serious for people who are immunocompromised or older. But I don't see it. For example, if it takes medically 6 or 8 months for it to get to that 300 million person, I have no idea what the number is going to be, but just following what governments have been saying, I think well before that, people will adapt and get used to it. So I kind of see it as being, within a couple months, people will start to be making more, and this is just guessing here on the exact timeline, but I do think people will start to be making more objective decisions rather than emotional panic.
So when the dust does settle, how do you see things playing out? Or maybe a better question is, what do you intend to do with your own money? You're primarily a mining natural resource investor. Is gold the obvious choice here, or are there other areas you're looking at? How do you intend to manage this?
Yeah, gold first and foremost be gold. I mean, when you look at what's happened here, I always compare it to 2008, what happened in 2008. And, that was a very difficult period. where the market basically went down for effectively 6 months in a row, 6 months in a row before it bottomed in late November of 2008. And I look at the situation now, and I think the key here is to make sure you got money invested in companies. I mean, the first thing that's going to move is cash flowers, cash producers, good producers, and because we've got a very strong gold price right now already. The currencies have depreciated tremendously. I mean, I was on the board of Equinox up until the recent merger, and you've got a fantastic management team there. You've got a mine that's operating in Brazil where the real is weakened all the way to 5. The Mexican peso is weakened to 23 to 1. So you've got, and oil prices have just fallen dramatically. Oil prices falling should have been something that the markets like overall, because you've got lower input costs, and if you're thinking long term, that's a big win. So the miners have never had better conditions to be making exceptional profits. So the first thing that's going to be doing well will be the producers, royalty companies, producers. And then when it comes to, as you work your way down the food chain, companies will be hit harder at that level, and that'll create some fantastic opportunities. Because always remember 2008, the companies that had strong balance sheets that didn't need to finance, some of them fell as much as 90 and 95%, but they all bounced back to new highs within a year or two of that crisis, if they didn't need to finance. It's the companies that need to finance when there's no money available that ruin their structure. So what you want to do is ensure you're with companies that have top management, good balance sheets, and I think you'll do really well. If I had cash right now that I was going to deploy, I'd probably wait a little bit. Maybe you buy little dips here, but I'd probably wait a little bit because I think prices might get a bit better before this is over. That said, I think some of the levels that we saw in the last few days on some of the individual companies, we might not see again. But I think it's going to create a tremendous opportunity if you invest wisely.
Well, there hasn't been a time recently where you can buy cash flowing, profitable, well-run companies at a price where, I'm speculating here, but I think they'll very likely double within the next 12 months. I look at, Sandstorm Gold, which was, recently a plus $10 stock. And then yesterday went down to, I believe, almost 450. It's already up today to 7 something today. We're seeing these huge cuts on Equinox Gold, Agnico Eagle, the big royalty companies. These are opportunities for investors to get in, and you're not guaranteed to make money, but I would say it's as close as a guarantee as you'll ever possibly see.
Yeah, I think that's right. I mean, I think if you can, picking the bottom is a very hard thing to do, but certainly if you picked up Sandstorm at 450, you're going, in my opinion, you're going to do extremely well off of that. And so if you can deploy your cash in a careful manner coming up here, is because there's going to be more shocks. I mean, today we're bounced back. I think the Dow was up 1,000 points. Yesterday it was down almost 3,000 points, a few points shy of 3,000. I think we're going to see a lot more volatility like that, especially as you start to see statistics in the coronavirus start to rise up dramatically and new measures come into place. That being said, the government stimulus package that's been put forward, as well as the interest rate cuts, have been very quickly and very, very dramatic. And so I think that the government is reacting much faster than in past financial crises. So I think that'll have a big impact in ensuring that the bottom happens sooner rather than later. And again, but it also sets the fate for gold, in my opinion, because with interest rates at those levels, fiscal stimulus at those levels, other countries having to do similar measures, I think for gold, it's never been a better set of events to really stoke the price to higher levels than we've ever seen before.
So I totally agree with you, but let's talk about for a minute the people that, like you or I, that already have a lot of money out there in various companies. A lot of the companies that I've been invested in, they've seen big dips in their share price, 10%, some up to 40% or more. What do you think current mining investors should be thinking about? And probably more importantly, what should these companies be doing? Let's talk about the exploration companies, the companies that don't have cash flow, are reliant on continually refinancing. How should they be managing this crisis?
Well, I think each company should look at their own circumstances and deal accordingly. So, for example, if you're a company that has you're cashed up, I would probably continue to move forward at a more moderate level. I think the key, from my opinion, is to make sure you got a year's cash. I think within a year we're in a different world. I think the gold price is a lot higher, and I think markets are functioning again. And so I think the key is making sure that you don't need to raise money within the next year, and adjust your program, and because these companies have control over their exploration programs, how they spend the money. One thing you never want to do in an exploration company is be too low on the cash front, because surprises happen like what we're experiencing now, and that's where you really get stuck. So I think the key is you want to be moving forward if you can, but do so at a pace that ensures you don't need to finance within the next year.
And you're the chairman of Eclipse Gold. So how is Eclipse managing this environment now?
Well, the Eclipse is a unique situation in the sense that we have a very strong group of people who came together to form Eclipse. So we've got very deep-pocketed individuals involved in the company, backers, advisors, etc. And we just recently did a financing, and so we're in a situation where we can make our money last for a year. We've got exploration work. We're going to continue to do that exploration work, especially long lead time items such as permitting, because the lifeline for an exploration company is drilling and ensuring that you've got permits, so there's no lag, because markets don't like periods of non-active of zero activity for exploration companies. So I think in the case there, we're in a very strong position because we've got cash, we've got permits to drill. We are working on improving the permitting conditions so that we can drill other areas that are currently within our permitted areas. So that's the approach we're taking. We're being careful with cash to ensure that we're spending it on essential items where we'll get the biggest bang for our buck, and ensuring that cash will last.
So how does that differ from a company like Equinox Gold? You were on the board of Equinox until this recent merger. You were there for years as one of the early shareholders and helping to build the company. An operating company that has a revenue but still has many capital commitments. How would you recommend that, and how do they manage the challenges that are sure to come up with travel of employees and supply chains and all these things that need to be considered?
Well, the key there is in that circumstance, you have a proactive management team. That team, in their background with Endeavor, for example, had lived through Ebola. Uh, this is not the first time they've been through a critical virus issue. Also, you're led by Ross Beatty, seasoned mining individual who's always thinking several steps ahead, proactive. So things like supply chain are issues that they were thinking of a while back already, and also they already have a very good understanding of protocols that you need to put in place to ensure that you can continue to operate your mine in difficult circumstances like this. So, I see that company as one that's tremendously leveraged to the price of gold, a real winner in the sense that the fuel prices are going down, currencies are weaker, very seasoned management team led by Ross Beatty, if one of the best, if not the best in the business. So a good place for shareholders to hang their hat right now.
All right, Marcel. Well, thanks for taking the time, and I want to be respectful of all the other calls and all the other things you have to do today. But is there anything else that you think that listeners or me or anyone should be thinking about in this time? Have you altered your behavior in any way in terms of how you're managing capital, investing, or selling, or just in general, besides, I suppose, locking yourself at home for the time being?
No, I think people should just use common sense, with their own lives. I mean, protect your family, especially protect the vulnerable in your family to ensure that they're isolated and have the things they need. I think from an investment perspective, you want to ensure that you're being careful. Don't panic. Make sure you're invested in companies that aren't going to need to finance. Obviously, the first thing to come back will be producers, and then we'll work our way down the line. and the bigger returns will come from companies further down the line. But you just have to ensure that you invest in the right ones, companies that have got strong seasoned management teams, good access to capital, good share structures and balance sheets, and you'll do very well.
Any particular companies you think investors should have an eye on over the next few weeks?
Well, I think the stands from Equinox is obviously are companies that for different reasons will do very well. Your Francos. I think as you work your way down the food chain, you can look at development companies like Integra, where you've got a strong balance sheet, seasoned management team. I think at Eclipse, I think we're very well positioned, etc. Companies that have those sort of circumstances, characteristics are the ones that'll do really well. And I think investors should, because basically it's a situation where you can buy some of the best names in the business on sale. And I'm a big believer that it's the same people creating most of the value. And so, you look at the BD companies, Lundin companies, and we've certainly got some companies in the pipeline that I think are exceptionally situated to prosper in the times ahead. So, and I think investors will do well.
All right. Thank you very much, Marcel.
All right. Thank you.
Take care.